few options for your YouTube intro. Choose the one that best fits your style. Option 1, concise and direct. Hey everyone, welcome back to Forex Scope. Today, we're diving deep into EURGBP on the 15-minute and 1-minute charts. Before we break down the potential moves, make sure you're subscribed so you don't miss any of our insights. Let's get started. Option 2, slightly more energetic. What's up, traders? It's your host from Forex Scope, and I'm thrilled to have you here. We've got a fresh analysis coming your way today, EURGBP, putting both the 15-minute and 1-minute timeframes under the microscope. If you're looking for clarity on this pair, you're in the right place. Don't forget to hit that subscribe button and join our community. Option 3, focus on value. Welcome to Forex Scope, where we aim to bring you actionable Forex insights. In this video, we're analyzing EURGBP using the powerful combination of the 15-minute and 1-minute charts to identify upcoming trends and potential trading opportunities. If you want to stay ahead of the market, hit subscribe now. Let's see what EURGBP has in store for us. Option 4, friendly and approachable. Hi there, and welcome back to Forex Scope. It's great to see you all. Today, we're going to be looking at EURGBP with a close-up view on both the 15-minute and 1-minute charts. We'll be covering potential signals and what to expect in the near future. If you're new here, consider subscribing for regular Forex analysis. Let's jump into the charts. The resistance zone between 0.88364 and 0.88375 is identified due to multiple significant price rejections. The candles between timestamps 176-295, 8700 and 176-295, 9600 show a clear struggle for the price to break above this level, with the high price reaching 0.88375 and the low price dipping to 0.88313 within this period. This area represents a ceiling where selling pressure consistently overcomes buying pressure, causing the price to fall back. The presence of upper wicks on candles approaching this zone further confirms sellers' dominance, indicating that the bulls were unable to sustain higher prices and were pushed back down, establishing a strong resistance. The formation of this resistance was characterized by a sharp price increase leading into it, followed by a rapid decline, demonstrating clear market indecision and rejection at these elevated levels. The volume during this period was also substantial, reinforcing the significance of this price action. The support zone between 0.88118 and 0.88126 is identified due to the price finding significant buying interest and bouncing back. Observing the candles between timestamps 176-291, 7300 and 176-291, 8200, the price attempted to move lower, with the low price reaching 0.88103, but buyers stepped in, pushing the price up to a high of 0.88124 and closing at 0.88108. This area demonstrates a floor where demand overwhelms supply, preventing further price depreciation. The presence of lower wicks on candles touching or approaching this zone indicates that sellers tried to push the price down, but buyers successfully defended these levels, absorbing the selling pressure and initiating upward movements. The interaction at this price range suggests a consolidation or accumulation phase where buyers were actively absorbing sell orders, establishing a foundational level from which the price could potentially rebound. This indicates a healthy support level formed by aggressive buying activity. The support zone around the price level of 0.88202 to 0.88209 is identified as a significant area of buying interest based on the provided price action data. This zone is characterized by multiple instances of price touching or testing these levels, indicating a reluctance for the price to move lower from this area. Specifically, observe the period between 1838 and 1850, where the price repeatedly found buyers, leading to consolidation or a temporary halt in the downward trend. The candles during this interval, such as the one at 1838 with a low of 0.88205 and the subsequent price action, show a clear attempt by buyers to absorb selling pressure. The low price of 0.88202 and the high price of 0.88208 within this defined timeframe demonstrate a tight trading range where demand appears to be outweighing supply, suggesting that this price level acted as a floor. The price action indicates indecision and accumulation at these levels, making it a strong candidate for a support zone where future price declines might be arrested. The presence of several candles with small bodies and wicks at these lower levels reinforces the idea of established buying interest. The resistance zone situated between the price levels of 0.88246 and 0.88255 is identified as a significant area of selling pressure based on the price action observed in the EURGBP data. This zone shows repeated rejections of higher prices, indicating that sellers are actively stepping in to push the price back down. Between the timestamps of 1743 and 1756, the price attempts to break above this region but consistently fails to sustain any upward momentum. Notably, the high price reached during this period, up to 0.88255, was met with immediate selling, causing the price to fall back. The low price within this resistance area, reaching down to 0.88243, highlights the extent of the downward pressure exerted by sellers. The presence of multiple candles with upper wicks or bearish closes within this range suggests that sellers are defending these price levels robustly. This consistent rejection of higher prices makes this area a strong candidate for a resistance zone where future price increases are likely to encounter significant selling activity. The price action indicates a battle between buyers and sellers, with sellers ultimately prevailing in holding this level. The Fibonacci levels indicate a potential bullish continuation after the recent consolidation. The support at 0.88202 suggests buyers are present, and the price is currently hovering around this key area. The previous upward momentum, evidenced by the price reaching 0.88255, implies that there is underlying strength in the market. We can expect a test of the resistance zone around 0.88246 to 0.88255. If this resistance is broken, the price could move higher, targeting new highs. However, a retest of the support at 0.88202 is also possible before any significant upward move. The Bollinger Bands are currently narrow, suggesting low volatility, but an expansion is expected. The tick volume shows moderate activity, which could increase as the price approaches key levels. The overall sentiment, considering the previous price action and Fibonacci retracement, leans towards a potential upward movement, but traders should remain cautious and watch for breakouts or breakdowns. The interplay between support and resistance will be crucial in determining the next move. The current price action shows minor fluctuations within a tight range, hinting at a potential breakout in either direction. However, the presence of the Fibonacci support level suggests a higher probability of an upward movement if the market sentiment shifts positively. The bulls might try to push the price towards the identified resistance, and a successful breach could lead to a more significant upward trend, offering opportunities for short-term gains. It is important to monitor the volume and candlestick patterns for confirmation.